Hey guys, this is Chris Mancola with the Mancola Group over at West USA Realty, and I wanted to share this important article with you. Kind of some internals on this whole idea of growth in the new economy that's coming our way with manufacturing and tech. A lot of people are wondering, where things are going to land. This is a great indicator looking ahead to kind of get ahead of the curve. Scoop: the overlooked Trump data economists see predicting a boom ahead. And in the article, some internals to take a look at. Trump administration economists spotlight a little notice piece of federal data they argue shows a business investment surge is in the works, one that could have lasting consequences for U.S. growth. Now, we already see a lot of companies bringing capital into the United States. There's about 15 trillion. We just had also just had, by the way, had trade deal with Philippines and Indonesia announced. Keep an eye out for, we have a framework for China, but keep an eye out more for that. But keep an eye out for India and Japan. But getting into this article, the big picture industrial production of business equipment is an early indicator of capital spending, okay, which ultimately fuels higher productivity, makes sense, and higher incomes. It has surged in the first half of the year per Federal Reserve, okay, industrial production data. Hopefully, the Federal Reserve and Jerome Powell are actually reading this stuff because growth is obviously one big way of offsetting a lot of the economic issues that we've had: higher wages, more jobs. Uh, these are goods companies buy in order to increase their productivity capacity, a bet on future growth. It includes everything from tractor trailers to computer servers to industrial machinery. Axios has learned that the Treasury officials will soon begin highlighting this data as a key economic achievement of the administration. So, what are they saying in these internals? Business equipment spending leads to capital deepening. Treasury Department Counselor Joe Lavorgna tells Axios, "You give workers more capital, and they can produce more with that capital." So he says that in his former role as private sector forecaster, he found that the business equipment data, okay, obviously the things they need to bolster production, strong indicator of underlying capital spending trends. By the number, production of business equipment in the second quarter averaged 7.9% higher than in the final 3 months of last year, which works out to a 16.5% annual rate. That was the highest two-quarter rise. Get this, the highest two-quarter rise since 1997, other than in the immediate pandemic bounce back in 2020. Now, back in 1997, you had Newt Gingrich getting in there and getting control of government spending, along with Bill Clinton, and the internet boom starting out. Zoom out, right now we got the AI boom, right, and a lot of cuts, not only with the big beautiful bill, but also with things like rescissions and impoundments, which they just had one. It was over $9 billion they did. Um, Along with all the tax cuts and deregulation that was into and codifying, I think it was 28 executive orders for those things. And Lagoria argues that this reflects business enthusiasm about more favorable tax treatment for investment spending under administration's signature tax legislation that passed earlier this month. Okay, so uh, if you're confident that the bill is going to get done at some point during the year, you started your capex early, and that's exactly what happened. The passage of the one big beautiful bill, he said, is likely to extend what we think will be a boom that will only be further reinforcement by all the good news on AI and its implications for worker productivity. Bottom line, the Trump administration officials view increased business capital investment as a linchpin for their economic agenda, including ultimately driving gains in blue collar wages. Expect to hear uh, talk of this and other indicators that suggest it's happening. So, uh, just a quick note there on that. I just wanted to make sure you were aware of that. We'll keep an eye on those things for you, and that's important because of obviously, wages growth, GDP. If manufacturing is going to be, in a downturn, they wouldn't be doing these things. Now, one thing that could kick this into overdrive again is lower Fed's fund rate, right? Because a lot of companies need capital, not only maybe from their own profits, but a lot of times they'll, borrow money in order to do this sort of thing, and that can come with a lower Fed fund rate. So we'll keep an eye out for that, guys. Just wanted to share that with you really quick. Hope you're doing well. Let me know if you have any questions. This ultimately will help with the housing economy too, of course, in the long run if wages go up and we have more productivity here and all those sorts of things for the economy. We'll talk to you soon.